All right, so I'm JR. Um, this video is in regard to a quick contrast between uh, the recommendations and comments of a particular um, chief investment strategist of a investment wing of a major U.S. bank. It's incidental. I don't know that his comments are much different from the comments of any other bank. It just happens to be that in September 2005, he made some comments that contrasted sharply with the comments that I'd been making in the years prior to that. And in December of 2005, I basically ridiculed the comments he was making. Now, what he said was stay away from the flurry of worries. Uh, do not be concerned about when the housing bubble might end and collapse. Do not be concerned about rising fuel prices and when it might cause consumers in the U.S. or anywhere else to shift their consumption patterns, and they're affecting their budgets and changing their uh, buying, selling, lending, and borrowing behaviors. He said, don't pay attention to any of that. Pay attention to the positive things yet to occur, which seems kind of silly. He made also several um, references in that article to how similar things were in September 2005 to uh, the year 2000. And in the year 2000, that was the beginning of a big decline in the U.S. stock market. So it was a little odd that he made these long set of references to how similar things were in 2005, how similar things were getting to how they were in 2000, right before a big decline in U.S. stock prices. Um, so there's some references to some. He's been on Bloomberg TV, CNBC. He's been featured in Money magazine and honored and acknowledged there for excellence. Business Week. There's some links to see that information and see kind of the credentials of the guy. I don't know the guy. As far as I know, everything he's saying is the same stuff that all of the other folks within his industry would say. His job is to present information that is valuable to the employer, to the bank and the investment group that he works for. And 6 years later, even though his advice was extremely expensive and people who followed it might have gone bankrupt because of following it, in particular in regard to real estate, well, he's still there because he did his job. He makes however much he makes from them, and I've no issue with him. He's doing what he's hired to do. But I did want to contrast with some of the things that I've been saying. In 2002, I first became aware of an impending credit crisis in the U.S. and elsewhere, and started looking for the next stages of that development. In 2006, I published my first reference to the emerging credit crisis, the shift in behavior in lending and borrowing, which is a credit crisis. Um, and I specifically made reference to real estate as the most sensitive type of investment in regard to borrowing and lending and credit. Um, and I made some warnings about stocks as well, just saying over the long run, over the next few years, stocks I don't expect to do as well as commodities, such as oil, gold, and so forth. In 2004, that's when I got that rising fuel prices were a big deal. Since 1999, fuel prices have been rising for the previous centuries, like centuries. Fuel prices have been coming down century after century after century, decade after decade, with some variation, of course, in certain decades and certain places. But overall, fuel prices have been coming down. In 1999, there was a reversal, and energy prices started rising. Oil prices doubled in several months, and at the same time, you could have seen the stock prices of the U.S. Airline sector, that sector of the U.S. stock market, airlines, their prices went down dramatically as fuel prices went up. Now, airlines use a lot of fuel. I think those could be related. I've said that for a long time. I haven't really done a lot of research into it. I just put the two charts together and say, hey, oil prices is going up quite a bit. The airline industry started coming down in 1999 in the U.S. I haven't looked in other countries, but I wouldn't be surprised if it was similar. Um, so 2004, I said, look, fuel prices are rising. They have been for several years. It's going to be a big deal in the U.S. and in Europe, just like it was in Japan, with Japan's decline since 1989. And the stock markets in Europe and in the U.S. had been declining since 2000 or 1999, end of 1999, beginning of 2000. And as of 2005, they were still far below the prior peaks. Certainly, the high-tech sector in the U.S. Was extremely far below the prior peaks. But we had seen already a peak in the middle of 2005 in the U.S. housing sector, that sector of the stock market. Most people might not have been looking, but again, since 2002, I've been expecting a shift in housing and real estate. I wanted to quickly note, why is it that I would suggest that in the middle of 2005, some parts of the U.S. real estate market began to decline? Why did those first regions that declined, why did those decline and not other places? And the simple answer is rising fuel prices. The two locations that peaked first and came down sharpest and earliest were Metro Phoenix and Metro Las Vegas, two desert, sprawling metro areas with a lot of sensitivity to rising fuel prices. So in Phoenix, which is actually, I've lived in Arizona since 1999, except for 1 year, so I'm pretty familiar with Phoenix. In Phoenix, you have fuel prices, not just in regard to gasoline, not just that you're doing a long commute, but your energy prices in the summer for your electricity bill might be $400, $300, depends on the size of your home and so forth. But a lot of those really big houses, those $400,000 and $800,000 houses that were so driving up the real estate market in Phoenix and Las Vegas, a lot of those places cost a lot to cool in the summer. The AC bills were very high. $400, $300, $500, those kind of monthly bills for electricity. So those were places that were very sensitive to rising fuel prices. Those were the places that first started to come down in terms of their real estate market, the amount of buying, the amount of borrowing, the amount of the actual average price for sales price, the volume of sales, all of that stuff. We saw it first in Phoenix and Las Vegas, or Greater Phoenix and Greater Las Vegas, within the U.S. Again, since 1989, you've had the same kind of stuff going on in Japan, lots of other cases. Anyway, you are welcome to look at, this guy who got a PhD in economics, was the head of a major bank. If you want to continue to use the advice of someone who has benefited his bank tremendously and resulted in bankruptcies for a lot of people who followed his advice, I give you his credentials. I do not see him as unique at all. I just don't have the interest in listing, every incompetent advisor or every advisor that's, going to be detrimental to follow. He may be competent, but the information he provides and the advice that's published, the recommendations, they're just really expensive. They're free, but if you follow them, they'll cost you hundreds of thousands of dollars. So, millions, whatever you've got. So, there's a link to my article there. I'm not really going to say a lot. At the very end of my article, I make reference to investing in cash instead of, this was the 2005 December article, I make reference to moving towards cash and away from real estate and stocks, which is a recommendation that lots and lots of people were giving at that time. Just maybe 5 or 10% of the advisors who are out there were recommending that. When I say lots and lots of people, I mean overall, given that there are lots of advisors, 5 or 10%, maybe 3%, whatever. a very small percentage of advisors were giving competent advice that would be valuable for people to follow. In particular, though, I don't really recommend that people follow just a newsletter or anything like that. I would recommend that if you want really great advice and recommendations, that you partner with somebody who has a vested interest in your results, who shares in the profits that you make, who is sensitive to avoiding downside risk and concentrating on opportunity and really taking full advantage of the benefits that are available through changing economic trends. Contact me if you're interested in getting right to receiving those benefits that are available as economic trends change. Some people learn about the trend changes early. Some people benefit from the changes most. You can be one of the ones who benefit most.